All right, good morning, beautiful people. Hey, YouTube scam artists, this is royalty-free music, so don't red flag it. Let's go. Turn up the radio! Turn up the radio! This trade is on fire! This trade is on fire! Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma. Good morning, everybody. Hope your coffee or tea is fabulous this morning. Hope you've had time to sleep. I hope you've had time to meditate. I hope you've had time to align your satellites for today. But if not, rest assured you're with a community of 14,000 foreign exchange traders stationed around the world. We want to work together as a community, so welcome. If you're new to these videos, if you're new to these live streams, subscribe today so that when I hit stream, when I click the little streamy button, you get an alert and boom, you got yourself a team. So why trade alone, huh? So today we'll cover technical analysis, maybe some fundamentals, and what? What else? I'll answer your questions. How about that? That's a good start. Make sure you thank our sponsor, TradersWay.com. Visit TradersWay.com. Open up a demo account at TradersWay.com. It's absolutely free. It takes you 14 seconds. So you go to TradersWay.com. In the bottom right-hand corner, it says open a demo account. So you open that. 14 seconds later, you're in your back office. It's clean. It's beautiful. And you can download MT4, MT5 if you want. If you'd rather have CTrader, you can do that. But the most important thing isn't necessarily your platform. It's that when you pull the trigger, pa-chow! Your trade is executed the way you wanted and intended. There's no funny, weird games that the broker plays. That's what you want. You want to pull the trigger and boom, it's sent to the liquidity partners in the interbanking system and it's out there in the real world. No trading desk behind the scenes. So tradersway.com. Also, the spreads are fast execution, or the spreads are narrow, the swaps are big, and the execution speed's fast. So give them an opportunity to earn your loyalty and respect. Doesn't cost you any money, but it is an obligation for being in this community. It is an obligation. So visit tradersway.com right now. And by the way, my name is Wayne McDonald. I've been trading for many years. I've been around. I've done a few things before Forex. So let's work together. Simple enough. Cool. So here we are. This is where we left off. No FD9, it's all automatic. Oh, right on. AK says I just joined boot camp. Right on. Awesome, guys. Let's get cracking. High fly, death defying 360 slam dunk. There's my, my drawing tool, my Epic pen is funny because it'll open 2 or 3 instances of itself. And it's a little slow, so sometimes I double click it again and all of a sudden, boom, boom, now I got 2 apps. It's kind of weird. Anyways. All right, so here we are. Finally got my drawing tool. What has happened this week? Let's see. What a great week. What a great week. Isn't it funny? You're like, what? So, what are you going to do here? Well, are you a bear yet? I wouldn't be. Some of the things I look at is I can use an indicator to say, well, based on statistical analysis, at least from the data set starting here, so we'll call that the beginning of the trend, it's more up than down. Using moving averages, it's been bullish since then. Can you imagine? If you used moving average theory, the one based in my book, if all you did was buy the 2155 crossover, you'd be done for the year. Check that out, guys. Look at December 31st. I blew that one. December 31st, that is my date of birth. I got to the party and I did the Smurf. I get it. I go it. Right? Anyways. So look at that. So the very last week of the year, profit taking. Okay. Isn't that neat? That's all you had to do. What did you do this year? I thought gold would go up in 2020, so I bought it. It's cool, huh? So anyways, so there's that. We got this movement here, and what a big movement it is. So we got moving averages, we got a trend, 200 EMA is, look at this, 200 EMA is exactly 2 standard deviations from the mean, which is kind of interesting. I wonder if that's not a coincidence. All kinds of other things. We're still making higher lows and higher highs, so one would expect in the future a higher low, higher high. So check this out. You know what could happen down in August and up in September? I don't know. But the thing is, no reason to be a bear, even if it stopped going up. And then, of course, you have to say, well, Wayne, it could still do all this. Yeah, but still no reason to be a bear. Now, of course, you can day trade this or intraday trade this or scalp it down if that's what you do. But that still makes it very bullish to me. Okay? So again, if you've read my book, you know if I'm above the 21 EMA, I'm bullish and aggressive. If I'm above the 55, I kill the 21 EMA, I kill it, and I become conservative. So here I'm conservative, here I'm aggressive. Okay? And then pivots. Okay? So pivots. So, you know, I don't know. Right now we're just caught, right? So now we can go into a 30-minute zone and check that out, right? What I'm looking at here is this. Delete. So maybe time to take a break. Cool. Temper your enthusiasm. Anthony's still swimming with the feces. How would you have gotten out of the spike down? Oh, let's take a look at that. The spike down. Oh, that's a market crash. So, no. Okay. What I'm talking about, okay, is I'm talking more of the theory aspect, but you're right. That, I mean, that you would have, should have gotten out of that, right? But the theory, okay, the theory behind the process, if you will, is that when the 21 crosses above the 55, the market is bullish, and as such, as long as it stays above the 55, you would remain bullish. That's the thought process, right? And that you're looking, so you expect the up, but then you expect the pullback, and then you buy. You'd expect the up, you'd expect the pullback, but if obviously something happened here, and we call that COVID-19. But going back to the regular world here, above the 55, you buy at the 21. Above the 55, you buy at the 21. I mean, let me say it properly this time. Above the 21, buy at the 21. Above the 21, buy at the 21. Above the 21, buy at the 21. Above the 21, oh. And this brings cause for concern, but it doesn't make you bearish. It makes you bullish and conservative. Okay? You get a little 1, 2, 3. We're back above the 21. Above the 21, buy at the 21. Above the 21, buy at the 21. Above the 20, so on and so forth. Okay? And by the way, if we get here this week, that means out. Check this. That also meant out. Now, of course, this meant out too. Of course, there's a lot of hindsight in there, but that's what those red zones mean, by the way. These red zones, they don't mean sell, they mean take profit. I spent a lot of time and I made my decision at the Pete's Coffee next to the Whole Foods in San Mateo, California. It was brand new. And I thought long and hard in the back room where you can sit, and they have sort of a bar-ish kind of place where you can put your laptop down and you sit on a bar stool and you look out the window. And I sat there with my laptop and I said, what do I call these things? And I thought long and hard about it. And I'm like, well, what does it mean? What is the point? Why do we care? It's more than resistance. It's something else. What is it? And I said, well, I'm very, very afraid people are thinking sell at the top and buy at the bottom. That's not necessarily what's going on, but that could be easily misunderstood. So I have to name it properly. And I came up with the idea of pivot profit zone. And I thought, okay, that's a place to exit, not enter, right? So this means get out, it doesn't mean sell. This means get out, it doesn't mean sell. This means get out, it doesn't mean sell. Same thing, this means get out, it doesn't mean buy. You don't make decisions because of the pivot points. Your pivot points help you make decisions because of your bias. And there's a difference, right? But so taking all this theory, you still have to have proper tactics, right? The theory just leads to your strategy kind of thing. But that's what this stuff means. And I'm just saying it's interesting, at least strategically, right? Or theoretically, it's interesting that even with this crash, we never actually technically became bearish. Okay. Okay. Lira is not trading in the international markets like it used to. So that's what's happening. So if you're like, oh man, the wicks are all weird, it's because it's not really a tradable currency anymore. It's sort of like the Brazilian real. There's capital controls and various other things, so it's not really a free traded market anymore. Okay. Okay. So, interesting is all I'm saying there. Very cool, very cool, very cool. What else can we use as a canary in the coal mine? You can use Brent. And once again, here's another market where we have a printed top. We have you can probably go all the way back, let's say. Let's call that a printed bottom. And there's not a lot to do without taking on additional risk. Okay, so if you are trading this, make sure you're trading your fundamental bias and make your trading process based on next week, not today. Okay, this is not interesting for today, but it's interesting for next week. Okay, cool. What else on commodities? That's Brent, WTI. Oh my, WTI. And same sort of thing, like if we go back to the bigger chart, we're one standard deviation from a mean, but we're held up by this 2155. So remember, if you're above the 21, right, you buy at the 21. Above the 21, buy at the 21. Above the 21, buy at the 21. And now we're in this sort of squeeze. And bull obviously is going to hope for that. Right now, though, I would simplify instead of saying, well, this must go up or this must go down. I'd just say, like, generally, not a lot has happened, and you need to be very careful. But the theory, anyways, as long as it's still above this 21, it's still bullish. Okay? So now you look at that and say, okay, well, I understand I have reason for concern, but technically I'm still bullish, so therefore I'm looking to for a price action that confirms bullish activity. Okay. Apparently somebody was interested in buying it around 40 bucks. Okay. So now maybe you get something like this, and eventually you get on the clue train that your 21 is on the daily is working. Okay. Okay? Or you go like this, and this goes up to 41, comes back down to 40.50, and then boom. Okay? So at some point on the smaller time frame, you have to say, okay, now I'm a bull. On the small time frame, looking for congruency on the longer term, and then you buy it. So on the hourly chart, you can see $40 was one standard deviation from the mean, right below the mean. And so maybe that was the catalyst for this upward move. But remember, the real catalyst isn't the hourly standard deviation. It's the daily trend, well, price. Okay. New trader, if you have conflicting, right? So your question, I think, is this. If one chart says this and the other chart says that, then you don't trade. Now, don't take that too far where you're like, well, the 15-minute says this and the hourly says this and this, and I can't trade this. You have to understand you're planning first. Okay? You're not looking for a signal from your chart. Your chart will not tell you what to do. So what I'm doing is I'm breaking this down saying, well, in here, there's a daily 21. And we're above that, so I'm a bull. Done. I have no other thought process as far as strategy. I'm a bull, I'm long, and I'm strong. Okay? So now I'm done with that. So the next thing is I look on smaller time frames for bullishness. I didn't really quite find it on the 15-minute yet, but I found it on the hourly. So now strategically I say, well, on the hourly, I can probably get a day trade out of this. So now I'm thinking day trader, which means long and strong till what, the London close? Maybe New York close? Okay. And right now, so here's the real challenge to what we got going on. Okay, we got a smaller time frame like this, and what you're expecting next would be something like okay, so you're either here early or here after, and you're trading this as a day trade. Okay, but here's the interesting thing: if you get this right, you might be right all next week. Why? Because this is set up on a daily. If I can get from one standard deviation off the 21, so the 21, it currently is about one standard deviation from the mean on the daily. So if I get that right, we'll go from one standard deviation up to two standard deviations, right? Before we have another, before we're just too far. Okay? Because once we get to two standard deviations, we will be 95% overbought. Still bullish, but just overly elevated. And you're like, well, how do you mean by overbought? Well, statistically speaking, based on our data set, over that course of time, look at 95% oversold, 95% overbought. Okay? This is about 93% oversold. Okay? So that's what that is. So you're like, well, we can go from 1 to 2, from 68% overbought, hit it up to 95%, and then there'll probably just be massive profit taking. So now let's go back and look at that so you can see it with your mind's eye. If on the hourly now, we get this, which we just talked about, then this would go up. And if you can maintain that, it can go up and eventually hit here in the future, which would be 95% overbought. And maybe there's some profit taking. Okay. The thing is, I wouldn't expect all of that to happen today because look what's happened. What happened today and yesterday and the day before and the day before? What's happened this week on oil? Nothing. So don't get too excited. Right? Temper your enthusiasm. Okay? Now you can make money in these markets, and we talked about this in the live group yesterday. or last night. You can make money in this market. You have to know what you're doing, and you have to be at the right place at the right time. But because you're so well trained, you know exactly what time and you know exactly what to do. And many people are doing very, very well. But it's also very unforgiving. If you don't do that, if you aren't doing the right thing at the right time. So it's real tight now. Your windows of trading are real tight. But they're absolutely predictable. You can set the time on your phone and you go to the right chart and boom. If you're not doing that one thing, which is the one thing you're always supposed to be doing, but now if you don't do it like exactly right, you're not going to get the results. And that's what we're seeing as a group. Like when you're doing your job perfectly, it's somewhat easy. And if you're less than perfect, it's improbable. Okay? And it's really good to see that, though, as the traders are growing, right? In their skill. Okay. All right, let's do some Bitcoin. Nothing. How nice is that? Bitcoin. What happened to Bitcoin? Nothing. Cool. So what price will Bitcoin do something? I don't think it's a price issue. So we have two things on the chart, right? We have the price. At what price will Bitcoin do something? I think it's more of a time issue. Not what price will it go up or down. What time will it go up or down? So I'm not expecting much out of it, but look at this. We're halfway through July, and we haven't even busted out of the buy zone. Amazing, huh? Okay. What drives Bitcoin? It's just a tradable asset. That's all. It's just a tradable asset. Okay? It's an instrument. Cool. That's it. Jim says irrational exuberance. Yeah, but at the end of the day, it's just it's an instrument that can be traded. It's like here, like WTI. This is not oil futures. It's an instrument that's a derivative based on oil futures, on oil, and then oil futures, and then I guess I don't know what they do to do this, but it's just an instrument. So this oil, this WTI, I mean, I was going to say it's as real as Bitcoin, but not really, because again, this is a derivative of a physical thing. Bitcoin's not a derivative; it's just a tradable instrument. That's all. Okay, you can trade it as long as you believe there's someone else on the other side. Okay, right? I was talking to someone the other day, and they're doing something like between 10 and 50 million, I think it was, a month in Bitcoin. So someone's doing it, but they're sellers though too. They already own it. They've owned it for a long time. Yeah. Yeah, no, seriously. They're selling thousands of Bitcoins a month. Anyways. I'm like, really? Actually, you know what I said to him? I said, why didn't you call me? I'm like, look, you know someone that's been trading Forex for 20 years. Why didn't you call me? I mean, how come I'm not making money on that? I actually said that, like, why didn't you call me first? How, you know, like, like, that's a lot of money. Why didn't you call me? There should have been some way for me to be on that. So anyways, WTI, we've already covered it. I'm just showing you, we went from doing this to doing this. So be careful. Well, I don't know if Bitcoin's a bubble per se. I mean, yes and no, but the reason it went to $20,000 is no one could sell it and you couldn't use it. See, when there's no liquidity, why would you take profit on Bitcoin if you can't spend the money? Right, but anyway. So no, there was no market. It could only go up. And there was no exit, right? So anyways, if you can't exit, it ain't coming down. So later on in the history of Bitcoin, we got liquidity started to show up and some people would buy and sell and all that kind of stuff. But whatever. It's just not, it's not the same as pound dollar. As long as you understand that. Okay? All right. What time of the day usually is your entry in the New York session? Asia, actually. Most of my trades are in Asia. Okay? Most of my trades are in Asia. So what I do in New York, and I tell you guys this often and often, in New York, I'm planning tomorrow. If you show up this late in the day and you're like, what's going on today? Dude, what's happened today is probably already, you know, let's say, okay, let's say this is the top of the day and this is the target. Okay, and you show up in New York and we're here, and you're like, what are we doing today? Well, okay, it's either going to go down here, which means you would be a seller at support, and you've also missed it, or it's going to do this and then down, but by the time you figure it out, you're all over the place, you know, right? Plus, again, you're still selling near support. You were supposed to sell it high. So I would argue, like, what are we going to do in New York? Well, if you weren't a seller up here, then what are you going to do in New York? You're probably going to lose money. Okay? So really what it comes down to for New York, you have to decide if you're buying here or not buying here. Or if you're a seller, where are you going to sell? And this is just not very good. It's just not very good. You're supposed to be selling high, so you're supposed to be up there. I mean, I don't know how else to say it. So you need to have planned this yesterday in New York to say, well, if it rallies back up to 126, I want to drop it like it's hot because I think we're going to be down here, maybe not this week, but next week. Okay? So how many people in my live swing trading group have heard 1,000 times that right now you're supposed to be selling at this level and exiting this level? Like, that's the plan for the week. That this is the sell. Let me do this in black now. That this is the sell if you're a bear, and this is the exit. Right? How many people have heard that 100 times? Am I short? No. No, I'm not short this. Okay? So the problem is when someone says, so what's going to happen in New York? And we're at the exit. I'm like, what do you mean happen? People are taking their profit and they're going home. You understand? What's happening in New York on a Friday? People are they're going out. They're going to the lake. They're going to the beach. They're going to the pub. What percentage of London, think of this. Let me ask. What is the weather like today in London? Check this out. You ready? Let's do some behavioral finance. It's 80 degrees and perfectly sunny in London. So I'm going to tell you about 92% of all Forex traders in London that happen to be working today, which is very few, they're all going to the pubs early. So right now it's London lunch. They already took profit. They're already done. They're already at the pub and they're already drinking and they're not going back to the office. It's summer and it's the nicest day that London will see this year. And you're like, Wayne's being funny. I'm not being funny. That's called behavioral finance. So what's happening today in London? Or in the New York session? Yeah, the day is over. They're taking profit. They're leaving. Okay? So you should have sold high. You're like, well, how did I know? Well, you were a bear, dude. You were a bear. Okay? That's how you knew you were a bear. Well, how do I know I'm a bear? Take a training course. It's going to take more than a quick answer. Get educated. Okay? So does this mean it can't go down? No, but it means if you show up and you don't have a plan, you don't have a bias, and you see this, and you're two things. One, it's been down for a while, and now you have to choose, should you sell low? Well, that's a really crappy choice. Or do you buy at the bottom? Well, what is it that you're buying? There may not be any buyers in the market with you. You're like, well, you know, it usually goes up. Well, this isn't usually. This isn't usually. What's your high frequency data on this? Are they trading British CPI? Or is it just the nicest day of the year in London? Which matters most? Okay? So anyways, that's where we are. The way you need to plan your days, guys, is you know you're a hardcore bull or a hardcore bear on this. Okay? So I'm more focused on dollars. So I'm a dollar bear, which means if I had to trade this, I'd rather it go up. So what's my day like? I have to choose, do I buy this or not buy this? Let me show you how long it takes me. Not today. Done. That I just did New York. The whole New York session is now done for me on this pair. Now, conversely, what if I'm more focused on pound and I'm like, the pound is a pig. A great big pig. Cool. And I want to sell this pig. So let me do New York for you. Oh, look, we're at support. I can't sell now. Done. Done. There you go. I just planned my entire New York session. I'm at support. I can't sell. Done. Okay. So if you know you're a bear, and you should have known you were a bear here and here and here and so on and so forth, it's actually pretty easy. Okay. You know you want to sell. You know you want to sell high. You do things like maybe you look at psychological levels or midpoint psych levels and lower highs. You know you want a lower high. Maybe you want a moving average on a high time frame. Maybe you want a pivot point. Maybe you want an average daily range. Maybe you use does anything, dude. Anything. As long as you're selling high as a bear, you'll do all right on the long run. But you have to be the bear first. So let's say somewhere in here you sell on it, like based on your 5-minute chart or 15-minute chart, because you know you're in the zone. Then your stop is up here, and you're not really risking that much. What's the big deal? Okay, isn't there a standard deviation? Oh, is this one? Yeah, maybe. I think it's more a linear regression, which is, as they say in Canada, it's the same, only different. But whatever, it's a trend. That's all I'm saying, right? I don't care really about standard deviation. I'm just saying it's a trend. So here you need to be a bull or a bear. Okay? And that's that. That's it. So really, the ultimate was last week you should have sold it, or Monday you should have sold it if you're a bear. Okay, like this is a buy, this is a sell, and everything else you shouldn't even be trading. And so I'm even looking at higher time frames than today. Like, what do you mean today? Okay, I said you should have been like, oh, if you were selling this today, you should have been ready to go there or ready to go there. Actually, you should have been short here. This is an exit last week for bulls. And this is the Sunday open. This is the weekly M3. This is what you should have been doing all week. Okay? I preach to teach. Okay? This is what you should have been doing all week. It opened on Sunday. It opened high. And you're like, okay, I'm kicking off the exit. Here's my M3. I needed a sign. You take the shot. And about, let's say London Open on Monday, you were short and you were done. Short and done. And what did you do all this week? That's what you did. Okay? That's really what I prefer. Okay? Now inside of this is London, this is New York, right? This is London, New York, something like that. I don't know. You need to know your lines. Okay? You need to buy low or sell high. And ideally, you have an idea of trend. Okay? So if the long-term trend is up for this, even if you're a bull, eventually you think that. Okay? And if you're a bear, let me plan next week for you. Ready? 3, 2, 1, go. Done. That's what's going to happen next week. Boop. It's going to rally up to 26 and it's going to drop. Do I know that to be factual? How the hell would I know that? What, I've been to the future and I came back in my time machine to explain this to you on YouTube? No, but if you're a bear, that's what your plan would be, and you carry that out because, let me try to simplify this. Okay. So, you ready? If you were a bear, that's what you think. Why? Because it happened here, because it happened here, and because it happened here. And if it doesn't do that, you've just been informed that something technically has changed in the market. That's why we use technical analysis, not to tell you what to do, but to confirm or deny your hypotheses. So imagine now you had been doing this, and when you got close to the top here, you drop into a 5-minute chart and you're like, I want to observe a rollover because I believe it's going to roll over. I believe it's going to roll over soon, in fact, because of your analysis. And on a 5-minute chart, it goes, sell it. Okay? And that gets you here, that gets you here. Gets you here. And it's easy if you have a fundamental bias. If you know you want to sell before you've sold it, it's easy. Look, if you know you want to sell it next week, sell it here. See? Done. Do I know that's going to work? No, but if it does, you're going to get paid. If it doesn't, you didn't trade it, so who cares? Didn't exist. Can I get a hallelujah? Hallelujah! 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 Yeah. I preach to teach. Yeah. Okay? Okay? So I don't know what's going to happen, nor do you, but you should have a plan. You should have a plan. Okay? I'm planning Monday. Friday, what do you mean? What do you mean? What do you mean Friday? Today's Friday. Yeah, what's going to happen today? You don't know what's going to happen today. You have no plan for today, and we're already halfway through the London session. And there's no plan. Really? Wow. Cool. So, whatever. You can do... Let's get off Confluence. Okay. Let's see. Does this look like a uptrend or a downtrend? Let's change the chart again. Let us do... Okay. So let's see what the trade plan was for today. Are you ready? Let's see the trade plan for today. The trade plan based on daily pivots was sell it right here. All you had to do is sell the Asian fade. Let's see. Down, 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 down. Up, up. Sell it. Whale oil B. Huh? Now, keep in mind, you see this? This is Monday's sell zone. So this sell zone, you knew yesterday. So that's what I mean. Like, you show up in New York, and what's going on today? Oh my God, you didn't sell it, the Asian fade? Like, what's happening today? People are taking profit and going to the pub. What are you doing? They're already paid. Today's trader already got paid. Okay? So, let's take a look at that. Neat, right? Now, there's the target typically, and then I have to go here. And I'm going to add the conservative target. We're still not going to hit it, I don't think, but... Okay. So the conservative target is here. So is it going to get beyond 125? I don't know. Plan big, expect small. Okay. All I know is that was ridiculously easy, right? See, let's do it this way. Let me open up my indicators. Do you need that moving average? No. Do you need that moving average? No. Do we need that moving average? No. Do we need that moving average? No. Do we need... Okay, right. So now we just have channels and pivots. Cool. Okay, and then we can go here even closer, and you can simplify this even further, and you're like, I only need to know today. Okay, and you could even get rid of next week because it's confusing to some. Okay, so this was the plan for the day. There's your signal, by the way. Do you know how much my signal service costs? It's $5 forever. Not a month, not $5 a day, not $5 a month. It's $5 forever. You just put this on your chart and you go, oh, that's where I'm going to sell today. Plan A, Plan B. Okay? What do you think? The best part of this oh, I just got some other crap that I've made over the years. Oh, the templates, I mean, over here. Yeah, this is just random crap. These X ones have to do with people that pay for the complete toolkit. They get stuff like this. That's what those X's are. Okay? So check it out. London. Nice. Okay. This is Asia, London, and New York. New York's just opening. Okay. Stuff like that. So they have others, but they're cool, obviously, but not necessary. So check this out. I kind of like this one. If I go this way. La 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 la. See, now I can save this as a template, right? I make templates all the time. Okay, now the only thing we have here is a 21 EMA, except instead of lagging, it's real-time 21 EMA. So often, if you look at it, I guess we can just add it now. Where do they have it? It's trend, I think, right? Moving average. 21.99. What the heck? Okay, there's a 21 EMA. Okay. So I always talk about the 21 EMA being a moving target. Right? Because there's a lag. So you have to kind of shoot in front of the moving target. So this is the 21 EMA in the future. What? Shut up! No, it's true. It's the real-time EMA. Look at that. It's the 21 EMA in the future, so you don't have to shoot at a moving target anymore. Oh, stop it! Shut the back door! I know these are at MetaTraders, guys. MetaTraders.com. Has nothing to do with the courses. So now you can just say, well, why would I want my dad's 21 EMA? Right? So anyways. So that's what all those other templates are. They're tools, but they're just tools. They don't make you a better trader, but they're cool if you know how to trade. They might be helpful. For example, I know someone whose neighbor bought his son a brand new Lamborghini Aventador. They had gunmetal gray with matted black stripes on top, and then he had the Italian stuff on the side because I think it's the 720 LP or something like that. Do you guys know the car I'm talking about? How much does an Aventador cost? $330,000, something like that. So he bought his son this car. Yeah, no. Gunmetal gray with matte black stripes. Okay. Do you know why he bought his son this car? To celebrate that he got out of drug rehab again. He graduated from drug rehab again. Woohoo! Yeah, boy. Good job, son. Got out of rehab again. Here's an Aventador. So I'm on the way to the grocery store, and guess what? There's a gunmetal gray, an Aventador on the wrong side of the road, facing the wrong direction, leaning against a tree with about 10 cop cars, and the whole thing smashed. The car did not make him A, better human being, or B, a better driver. Nor will a lagging or non-lagging 21 EMA make you a better trader. Okay? But no joke, I saw it the other day, and I texted my buddies, and I'm like, hey, guess who just smashed their Aventador? And they're like, oh my God. Here, I'll show you. Don't tell anyone, though. Let's see. I gotta go to my text app. Hang on. I'll show it to you. You guys want to see it? Aventador for sale. Oh, here it is. Wait, it's this one. Okay. So I sat down with my kids and I said, if they are on drugs, they're on their own. I'm giving them nothing. Because even buying them an Aventador won't make them better. So if they're on drugs, I'm not going to do anything for them. I told them, seriously, having that dinner. Check it out. What do you think? Nice. Let me turn that off. Yeah, there we go. Nice. Nice Aventador. Is it gonna? Nice. Yeah, boy. Yeah, boy. Congratulations. Graduated from rehab. Woohoo! Good for you, boy. Yeah. So let me just say it again. These templates will not make you a better trader. If you suck at trading, it doesn't matter what tools you use. Okay? Okay? But if you know how to trade, these might be helpful because you're like, oh, I can cut a corner on that. Great. Use it to cut a corner. But if you don't know how to trade, it's not going to help you, right? Okay? So they're, right? You see what I mean? None of these tools. So if you recall, yesterday or the day before, I said you need to essentially have various methods to identify support and resistance. Okay? That's all you really need to do. I can't. My mouse isn't working. Okay? You buy it at support if you're a bull. And that's it. Yeah, but even if you don't know what you're doing, how could you possibly be how can you possibly be ready if you don't know what to do, right? There's a Metallica saying in there somewhere. Oh, it's eluding me. Anyways. It's the same thing, though. Emerald is like, but that's the same thing. Support and resistance is the same as supply and demand. It's just someone else is changing it to sound smart. What methods? How to buy at support? Yeah, buy at support. But yeah, there's probably close to 50 hours. It says 35. I wouldn't be shocked if it was 50. Yeah, you have lots of room for, for learning in there. But the thing is, to sell at resistance. That's all it is. So you need to know the right tools and the right methods so you can do analysis, okay? And you need to understand fundamentals, but the most important thing at the end of the day, or more importantly, the beginning of the day, you have to have the patience and discipline to actually carry out your strategy. You have to be able to execute. And, you know, we talk about this in the venture capital world too. Okay, you got a great service or you got great intellectual property, your engineers are great. But if you can't execute, your idea is worthless. It's all about execution. Are you a bull or a bear? Yeah. Fail. Okay. All you have to do is execute. What your bias is irrelevant, ladies and gentlemen. What your opinions are ultimately are irrelevant. Okay, I've shown time and time again, I don't care if you're a bull or a bear. If you choose one and trade properly, you will make money. That's all that matters. You will make money. It doesn't matter if you're right. There is no right. There's no right or wrong. There's no justice or injustice. There's no morality in Forex. Okay? But if you don't know what you're doing, or you're incapable of doing what you want to be done, then you're not going to make any money. That's it. Think about the farmer who wants to make a lot of money planting corn, but wakes up late. Or doesn't till the field at the right time. Or doesn't like chemicals, so whatever. I mean, you must farm. You have to get out of bed and work really hard and get really dirty, and it's relentless and it's every day and there's no weekends. And even then you might get nothing. Okay? This is better than being a farmer. Now you might have to work as hard as as a farmer. Farmers work hard. Those that own like a little Chinese restaurant down the street, they know how hard it is. They work really hard. Little restaurant owners work really hard. They're up at 4 o'clock in the morning. They're still at the restaurant 11 o'clock at night. They have to buy all the food before you even show up and buy it. I mean, oh my God. Okay? Forex is so much easier. You're so lucky. And all you have to do is execute. And you don't even have to be right. You're a bear up here, or you're a bull down here. And that's all you need to do. Okay? Has anyone worked in a small restaurant? At 5:30, the lettuce shows up, and the onions and the bell peppers, right? And at 6 o'clock, the protein guy shows up. Have you ever put your hand into nearly frozen feta cheese oil at 6:10 in the morning? You're pulling that out, and then you're breaking it all up and put it in the thing, getting all that prepped so that the chef has, right? And then you got to slice up all the bell peppers and slice up all the onions and slice all this up and slice up all the mushrooms and put all that there so that the chef, when they're getting ready, it's all in the cooler ready to go, right? It's hard. It's difficult. Okay? And they don't have dreams of being on a yacht or driving a Lamborghini. Okay? No Lambo. You're just trying to get through life alive. So anyways, I'm encouraging you to plan a little bit better and execute a little bit better. These are unforgiving times, But notice, if you bought at support or sold at resistance, you did fine the last several weeks. If you're doing something else, you're probably very dissatisfied and you're telling yourself, I can't trade during summer. I can't make during summer. I can't make money during the summer. And in that case, you're probably right. You can't. But other people are. We had people in our live group yesterday. One person was saying, it was so easy to make 600 pips last week. I just bought there and then I day traded it from there. And it was easy. I'm like, wow, awesome week. Good job. Good job. So then we talked about why it was impossible for everyone else. And we agreed to have done that, you had to be at the exact right place at the exact right time every single day for the week. And we all nodded our head, yeah. Because if you weren't at the exact right place at the exact right time with the exact thing in mind, it wouldn't have happened for you. Okay? It wouldn't. So now it came down to, well, how did that person know? Well, that's what a good trader does. In fact, it's so obvious, usually you can just schedule it on your phone. Paching! Oh, I got to go to my charts now. I'm going to have a great setup. Boom. Long again. 8-second trade plan. Off. Drop a stop. Take a walk. We at least need to know how to trade next summer. In fact, I'm gonna add to that. So one of the things we did yesterday is we got together as a group and we discussed, right, the summer, and then I broke people into small groups of like 7. And what they did was discuss what they actually learned and what they took away as a learning experience of how I prepared them before summer happened, then when summer happened, and then after summer happened. And from that experience over 6 or 7 weeks of preparing them for summer, what happened was this was group work, Peter. Now the performance coaching, hardcore homework. Oh my God. But this was us getting into groups of 7, discussing as the group what their takeaways were. And then we got all the groups together. And so, I don't know, 40 of us put together a list of the things that they learned so that they can do next week, next year, and the year after, and the year after. And then we expect what all of these things meant. Okay? And so it was more of a manifest destiny exercise versus we got through summer together, now what? But, so anyways, pretty cool stuff. Hey, Raymond. I think, Raymond, you had the one on summer seasonality, I think. But, cool. So anyways, that's that. Yeah, so I got to go. It was a wonderful week. Wow. What a wonderful week, right? Yeah, that's right. Yeah, knowing when not to trade. That was Raymond, I think. Right? That was Raymond. And that is also a big one. Knowing when not to trade. You know, and the best part of that is it's difficult for us as traders, but if you were to give your track record to a potential investor, they don't see the, let's say in the course of a year, the 72 days you didn't trade. But they're like, oh, right? They see what? 58% return for the year. And you're like, oh, with low volume and low volatility? Oh, low volatility and various other measures of variance, right? Low risk, right? All that kind of stuff. Like, yeah. Cool. So, peace on earth. May the pips be with you. May your profits be above average. The link to my book is in the description below. The link to Traders Way is in the description below. The link to MetaTraders, which is all my chart templates, are in the description below. The link to our trading courses, which are right now almost 80% off, that's in the link below, or the description below. Click the link. Is there anything else down there? There's tons of stuff down there, I think. So anyways, thank you to you for all your effort. Thank you for being a subscriber of Forex.Today. And thank you to Traders Way for being our sponsor. We appreciate them. Remind yourself, these webinars don't cost you money, but they do come with an obligation. They're not free. Visit tradersway.com, open a demo account right now. Have a wonderful weekend. Adios, muchacho and muchacha. Still here? Should go.